Okay, good morning everybody. Bunch of stuff to cover this morning. We'll focus on some of the ideas from the morning meeting and Apple, of course, my new favorite stock for the past week or so. For those who follow me on Twitter or the old live shows, Apple's not a stock that, it's not a good day trading stock generally. It just so happens that because of the unusual weakness over the last week and a half, that it has become a pretty good intraday stock. And also was a good swing stock on this starting last on the day of the jobs release on that move from 666 to 654. There was a good follow through and a bottom. So overall, for lower time frame traders, swing and intraday, it's been quite good over the last 7 trading sessions. My thought process here, and I just tweeted it, it is trying to bottom. If we go back here to the 9th. There was a flush out, there was very heavy volume here. Even if we go to the 30-minute, we can see that this is really big volume into this down move. Went up about 20 points, came back down, didn't quite test it on Friday, but today it did come down there and test it, and it has moved now about 5 points off of the low. If you're sitting in front of your computer and you're watching it and you're trading it off of these flush areas, you know, that's one way to put on a small position. Certainly, you have to have very tight, well-defined risk there, and that's okay for a day trader. In fact, I did at one point today bid for it. Where did I bid for it? Right here. One of these moves into 630. There was a lot, and you can see it's actually reversing. And so anybody who bought into this flush here, you can see here's the highest volume of the day when it tested last week's low and quickly moved off of that. If you're looking to trade on a lower time frame on a reversal, what you want to see is the higher volume happen right when it gets down to the prior low. You want to see the quick move higher, and then when it starts to pull back again, you want to see it hold at a higher price. And you saw that here. So for lower time frame traders, guys who are focused on the intraday, okay, once you see this heavy volume flush, to try to get long into this up move here, and if it starts to hold higher, maybe build into it. But from a swing trading perspective, you really want to see it get back up to this level where it's failed now from the first 4 trading days and hold above there, which is at 635. It had trouble here on the 11th. I was tweeting about it and trading it in this little tight range here. Actually, you got to go to the lower. Here's the 5-minute. You can kind of see here it got up to the level, failed, but didn't have much of a pullback. Failed there again, very tight pullback. So I thought it would burst through, and so I was long from this 630 to 80, I think 80ish, and I was ready to be more aggressive on the break above. Never happened. Stopped out for a small loss. So we go. Here's the 10-day. Here's the 15-minute. So again, I have these different ranges that have developed. It's still well within inside of this lower range, but for it to be a safe short, you're either, you know, it has to take out last week's low, or you're trading it against the 634 to 635 area, which has worked 3 or 4 times. So I imagine if it got back up there again and you were making money on the short side, you would give it another shot. But eventually this stock will actually turn. There are plenty of longer-term investors and higher time frame traders that still believe in it, and you still have the earnings coming out the next couple of weeks, and there's going to be some people who want to get in front of the earnings. So spent enough time on that one. Why don't we get to LLY, which so far has been the best stock today. And this is a setup, and I know a few people on the desk have traded on the long side today. This is something we talked about in the morning meeting for 2 reasons. Number one, here's a 3-month. Anytime a stock has a big move, like a Catalyst on October 8th, had a big up move on some positive drug news, and then it moved from $48 to $50.50. The following day it peaked out at $53.50. Anytime you see kind of a huge move on huge volume like that, what you look for over the next 3 or 4 trading days is some type of pullback, settling in, and then a break of what we call the mini downtrend. So from a bigger picture perspective, it's still moving higher, but then after it gets too overextended, it pulls back in, and you want to see a break of this kind of mini downtrend. So our trigger today was above $51 a share. And you can kind of see right on the open it plowed through that. So if this was a stock that you were looking at right on the open today, you can see that plows through there right on the open, up to 52. Had some trouble there twice, and this is the level that was used later in the day for people who didn't catch that initial drive up to $52 a share. It pulled back about 70 cents, but once it got above 52 again, it actually held. So a lot of times we like to say trading is not that complicated. Resistance becomes support, support becomes resistance, and in this case the morning resistance was 52, and it held here on this pullback from 52.5, and that was a nice entry. And then also when it made the new high above 52.5 was pretty good as well. So far it's peaked out at 53.15, and is having trouble right now at this 52.90 it looks like. So not that much of a pullback from the high today. Right now just want to check back in on the radar, see where it is. It's actually worked its way up to number 2. So it was number 5 this morning. So relatively speaking, of all the stocks in SMB's tradable universe, LOY is number 2 right now. Pretty high number. Just tells us how on an intraday basis how strong this is behaving. So overall very strong. Consolidating against this 70 cents it looks like. I think, if you want to nibble here in the 70s, that's fine. Proper stop is probably below 65. This wick low here is 64. I'd probably just make the stop below 60 cents. Again, is it worth buying in the low 70s to risk 15 cents here? I think so. The stock could easily have a second leg today, and overall trending very nicely. If it breaks to the downside there, look for a move back down into the 52.35 to 52.45 area and see if it bases there. But a stock like this, you want to give it the benefit of the doubt. We have had more 5 horizontal consolidation bars after 10 o'clock. We look for 5 of these bars. That's a good consolidation, and it looks like it's about to test the bottom of the range right now as we're talking about it. So let's see what it does. You can see there was no volume here in the last few minutes or so. And so this is kind of what you want to see. You want to see it come back down to the bottom of the range. Even if it dips below here, you want to see it come down to this 65 at most, then work its way back above 90 cents, and that's where you'd have more confidence trading on the long side. I'll stick with this for another minute or so, see what it does here in the 60s. All right. So anybody who, if you bought here at the 70 cents, it's down here at the 60, and I'll zoom in on the tick. See the volume's picking up. So about 100,000 shares were sold here, 150. And if it starts to hold below 60 cents, I think you sell out of the position and reevaluate. Well, it didn't hold below, so that might be it. So again, somebody just dumped about 100,000 shares there. And what you want to see over the next couple of minutes, and I'll move away from it, over the next couple of minutes, you really want to just see it get back in the 70s and start back inside of this range. And if it were to do that, you could start building into a position with confirmation above 52.90, and then ultimately above 53.15. You have last week's high of 53.5. All right, so let's get to some of the other stocks. Give me 1 second. Okay, other stocks from today. C. This is one I tweeted quite a bit about, and let's just go to the 6-month first on this. So this one is in a longer term uptrend. I thought it was set up better than JPM and WFC on the long side, and hopefully some guys on the desk are long it. I haven't been trading for the last half hour or so. See Shark is long it, Leo is long it, and at least on the guys on the real time, those are the only 2 that are long it right now. But I think it's worth, if it starts holding above 15 cents here, I would think everyone should be long it. So, and there was a little bit of money. A couple of people tried to trade it on the short side today, but I think the setup was much better on the long side. You can see over the last couple of days came down with the other financials. We had very clear resistance areas, 35.80 and 36. It had peaked out at 36.15 on a Thursday. And so my first trade in this was I just bought it on the dropout right on the open. I got hit at 22 cents, I think. So here's what it looks like. I was going to build into a position in front of this 35, so I only got hit with a quarter position right here, immediately came back up. I sold it into the spike to 80 cents, bought it back at the half, and traded this trend higher. I added to the position above $36 a share, and I was stopped out here, and because I was done trading, didn't get a chance to buy it back. Even if I was still trading, this wasn't particularly clean here at the 80 cent level. So I don't think I would have bought it back until it made this higher low here at 85, and then this tight consolidation against 36. This is what would get me in. And then to really have confidence that it's going to move to higher levels, I want to see it hold above the morning resistance, which is 36.15. You can see right now it's there's some good volume, very nice volume into this up move above 36.15, and it appears to keep on spiking down to about 7 cents or so. See how I can use this as a reference. Every time it spikes down, there's some buying at 7. It goes through it, it gets back above, and overall very strong. I'm not sure where this one falls on. Is it on the radar? Yeah, it's number 4, 5, 6, 7, 8, 9. Looks like it's number 10 on the radar on strong today. So a very strong stock, top 10. Why don't we take a look at a couple more of these? DN, Pan, Dunkin' Donuts. This one just looks really good. I think it was before it was even on the SMB radar. It was on people's radars this morning. It's just set up really nice technically. Was strong on Friday. Light volume, so we're looking for a little bit more volume. 32.25 was the next resistance, and it seems like it's on a bit of a mission now. Here's the 6-month chart. This one IPO'd not that long ago. Next major resistance area is probably about 33.5. So if you're trading this one on the long side today and you're looking for a move in the afternoon, 33.5 would not be unreasonable. Looks like it failed here right above 33 earlier, and it's come down and tested the mid-60s 3 times. So your best entries are in the mid-60s, maybe even in the low 70s, and you don't want to get more aggressive until you see it hold above the morning high. Good question. Notebook Led asked me, why do I never use fib levels? I guess mainly because I don't need them. I think they're a good tool to have for, people use different tools. They use moving averages, they use fib levels. Maybe Rick, who's in charge of our systems desk, wants to lay in why I don't use them. But basically, I have a pretty good feel for how stocks move, and generally, I can sense where the VWAP is, even though I don't have the VWAP on my chart. The fib levels generally happen to coincide. There's so many of the levels, they tend to coincide with support and resistance levels that I'm looking at anyway. But I think for newer traders, and actually a very good trader teaches fib levels. Anne-Marie Trades, if you don't follow her on StockTwits or Twitter, you should follow her. She does a really nice job of explaining how she uses them in her short-term trading, and that's somebody who you would talk to about those. Question about Q-Core, that was in the morning meeting. Daniel is asking me if I think C is a trade to hold. I think I covered that, Daniel. Now that it's above this 15 cents here, as long as it spends another 10-15 minutes above this level, I think, Daniel, you want to hold that. And we can see that this becomes a trade to hold, and even a swing trade. We could be looking at 37 at least by the end of the day if it continues higher. And then over the next few days, maybe you even see 37.5, 38, depending on what happens with the market. And the market is now, here's my my uptrend range since the June low, and it's really flirted with breaking below this. And what I said today in the morning meeting was, despite the fact that it's flirting with breaking below this uptrend channel, there's no volatility. And so I'm a little bit skeptical of these pullbacks in the market. And I know we've been down 6 out of 7 days or something like that. But without the volatility and without the fear, I feel like at any moment buyers can step back in and just have us go right back up to 147. So what would change on that for me is if we ever flushed out below, let's say 142.50, and I saw a little bit of an expansion in the range, a little bit more fear, then I would have more confidence in us coming down to this 140 level, or even into the 138 to 139 level. But I'm just not seeing that that type of volatility you would normally see before a big down move. So Q-Core. So the thought on Q-Core was this. We started talking about it last week. It caught an upgrade, which I thought was a pretty reasonable upgrade, $24 or $26 target or something. Maybe it was 28, but it seemed pretty reasonable. We made a series of higher lows over the last few trading days. This morning, I wanted to see if it could, on a pullback to 22.15 to 22, to buy it. Now, I haven't been involved, but this is kind of exactly what you would want to see if you wanted to buy it on a pullback. You'd want to see it come back down into this area here, which was resistance the last on Friday, maybe nibble, and then get a little bit bigger into the 22 level, and that worked quite nicely. Your stop should be below 90 cents, right here. And so if you're building into this position here and your average is around 22.10, you're in good shape right now. What you want to see is a move back above 22.50, because if you get that, or I guess 22.75 is my level, if it gets above 22.75, then I think it does some sort of fill into this area. I'm not expecting it to go back to 30, but certainly 24 I thought was a reasonable target if it got above 22.75. All right, Kevin wants to look at BBY. It's kind of like the market, Kevin. I think it's it gapped down on the earnings. It's making new lows, but there's no conviction. And I think part of that, and it's the same thing with Apple too, which is you have these companies that are fundamentally sound, and when they pull back to levels, there are going to be longer-term players who want to get in because BBY still is a high-growth stock, Apple's still a high-growth stock, and there are prices where people are going to step back in. And it's a bit of the 10-day for you. And so it is below Friday's low, and I suppose you're short it. And it's moving lower, and so good play being short it below Friday's low. Had some trouble here. It looks like it's 61.10. It's now below 61. I guess as long as it's below $61 a share, continue to stick with it on the short side, but understand that there's no real momentum to the downside. And in terms of how weak is it? Is it even on the radar on the week today? Yeah, okay, so it's all the way at the bottom of the list here. And notice it's blue. It's not even in play. It's looks like it's about number 30 on the week today list. And it's blue, which means it's not particularly in play. So any type of quick reversal here, I'd be quick to get out of that one. I'll check back in with Apple. So here's Apple. I guess you can draw a little bit of a channel now. Take a look at it on the 5-minute. So since it bottomed and held here at this 226 level for over a 30-minute period, it's moved up another 5 points. So again, part of the bottoming process. But if you're not in, for me, if you're not in from down at these lows here, getting in the middle of this range, this is basically a 10-point range here. Getting in here could be deadly. Because what are you're going to get in here now at 6:30? Are you going to give it to below the low of the day? You're actually better off, unless you're trying to trade this channel, and you got to be a really skilled day trader to do that. You're better off actually seeing it take out the prior few days resistance, and maybe trying to get in for an afternoon move up to 640, or tomorrow getting in against the 635 level and looking to play it back up to 645. If you're a higher time frame player though and you're in here, I wouldn't even be thinking about getting out of it till 645, and if it traded cleanly up to that level and maybe held above 640 and broke through there, you might catch a move into earnings right back up to 665. So a long ways to go, but that's kind of like my thought process on that one. Yeah, Bruss makes a good point here on the conversation page, and Bruss is an experienced trader in both futures and stocks. It hasn't been clean, and that's why I did get stopped out below this 80 cents before and I haven't had a chance to get back in. But again, it's worth a stock that's showing this much relative strength, this in play. It's worth trying to get back in. And Russ's question is, what price action quality would you prefer to see? Well, I prefer to see that when it pulls back to 80 cents, number one, I don't get stopped out. Number two is more similar to what we saw in Lilly here, and Lilly actually did break to the downside, but I'd rather see something like this for us, where it trends up, it comes down, and I have very clean, nice defined consolidation range. That gives me more confidence to get involved. And again, this one broke to the downside here. Didn't quite get back into my next little buy area zone, so I don't think there's really anything to do there on this one. I'm going to continue to watch it, and it's shown the good strength, and it has the history over the last couple of weeks, so I would continue to watch that one as well. SRPT, I got to check in with that when I said I was going to talk about it. So here's SRPT. We had two levels from the morning meeting today, 29 and 30. The 29 level actually acted as resistance. And again, these are not complicated concepts. Trading is not easy, but there's something that you can remember, which is if you've identified important levels, 29 and 30 were our two levels. If you notice that the first move on the open is below our most important level, and our support level was 27. it comes down. You don't really want to make a trade here in the middle of this range. It comes back to this idea of don't make trades in the middle of ranges, make trades against bottoms and tops of ranges or breaks through them. In this case, the first move was down, it retraced back up to the 29 level. The high of the day is 29. So this is a perfectly legitimate and good trade to make. Your risk here is probably about 20 cents, 20 to 30 cents. And if you put it on something small, even a quarter position, you catch the move right back down to our support level, which was $27 a share, and attempted, I guess, to bounce there a little bit. The second try went through and came off even further. It's back above 27. I think it's kind of in no man's land right now. It is a tight range, and it is above the longer term, or this support from this recent support, the 27. If it breaks above 27.50, maybe you're going to see a move right back up to 28.5, 29. But the real trade today, the bigger trade, was short against 29, cover into this 27, which was the support into Friday's close. I think I'm gonna wrap it on that. Oh, I did say I was gonna do one teaching moment on this S, and I'll just cover this quickly. So I'll try on the show to talk about in-play stocks, actionable ideas. I'll also try to have a teaching moment and answer some questions. So there's always a lot of confusion when there's a takeover, and every takeover is different. In this case, the headline was they were going to buy 70% of S for $7.30 a share. So initially, when I saw that, I did quick math in my head, which was 70% at $7.30. I multiplied 0.7 times $7.30. I then had to make a judgment call as to what the remaining 30% was going to be worth, and that's how I came up with $6.65 last night. But then when I read the deal this morning, just go on S's website, you can read the deal. It's only they're going to tender for 55% of the shares at $7.30, so multiply 0.55 times $7.30, and then the remainder, based on where it was trading in the pre-market, it was valuing the remaining shares at 4. So if you do 0.45 times 4 and 0.55 times $7.30, that brings it to about $5.80 a share. And that appeared to be where the market was pricing it. As a general rule, I would say most people probably had trouble following that. If someone's being acquired, don't trade that stock. Trade the acquiree if it's a publicly traded name. There tends to be a lot more price action. Sometimes you'll catch big moves to the upside, even though generally people say, hey, when someone's acquiring, they're spending cash, they're spending stock, it could be a negative. So a takeaway would be if someone's acquiring someone and their stock is actually up on the day, that's a huge statement by the market saying, wow, we really like this deal, it's going to be very accretive probably, and make that play on the acquirer on the long side. And overall, the other reason we don't want to really focus on S and why we didn't today was it's not moving. It's in a 10-cent range, and we need movement to make money because we're not trading with 500,000 share positions. Anyway, thanks for joining us, and we'll continue to do this at 11:15. Monday, Wednesday, and Friday, maybe with some guest hosts on Friday, hopefully, for me. And we'll take your questions, and happy to do it.